Hey everybody, good afternoon. We're joined now by Tom McEntee. Tom's been a trader for over 30 years, traded with Larry back in the pits a long time ago, and he's trading for himself over the past few decades. And, very talented equity and options trader. He's over the past few weeks taken us through, the trades that he posts on the site, and the way that he looks at them and the way he looks for very good risk reward opportunities. And so thanks for joining us again, Tom. How's it going?
Thanks for having me, Mike. It's great to be on again.
Yeah,
Finally
good to
got a
have
little
you back.
volatility. We got some volatility these last couple of days.
Yeah, we got Nasdaq
Volatility
down
coming
over a
back.
percent right now. Finally got some two-way trading. The market's moving each day a little bit, so that's good.
That's all you wanted. Exactly. You want to have a lot of color. Not in the days of electronic trading, you don't have it. But when you had red tickets and black tickets, it's nice to have them somewhat evenly balanced. You're getting that opportunity now for a first time in a long time, I think. And you're getting some volatility back. And so
Yeah.
and it's all about, it all comes down to what you do with it. If you get it, and if you're going to avail yourself of it, it's great.
So,
So
what
we're
sort
getting
of
some
opportunities are you looking at in this kind of higher volatile environment?
Okay, well, it's interesting. I posted something yesterday. I guess around this maybe 10:30 in the morning. I did a pairs trade, and I haven't. That's the first one I've done in here with you guys, and that was the first one I'd seen set up since that I thought was attractive and liquid enough since we've been up. So about 5 weeks, 6 weeks. At any rate, everyone knows what's going on here with Apple. It's a complete outperformer. It's absolutely done gangbusters this entire year. I think if I have a chart up in there, I think it'll show you the correlation of the Apple. What I want to do is I want to make a short bet on Apple. What I want to do is I'm not willing to call a top here. I don't know. When we break out to new highs, I don't have a reference point other than using Fibonacci extensions. I don't have a reference point to say where it might stop. So I don't want to do that, but I can avail myself of there's other tools in my toolbox, I think. And what I've noticed in Apple is the fact that for the first time, I've been trading it in and out, a couple times a year for a long time. First time in a long time, the Apple skew. I always talk about skew. It's a four-letter word. I get it. But Apple skew is historically flattish to a slight bend from the, slight sloping downward from top left to lower right. Since this move, which has been nothing short of spectacular, I think the earnings came out on July 31. Stock was 190, traded as high as I think 229 this morning. So that's about 20% ballpark, 20.5% in the past 5 weeks. Spectacular move, and it's not a biotech. It's obvious it's the most well capitalized company in the United States. So that said, now you would typically you'd see with a move like this, Apple volatility is typically somewhere around on a 1-year basis. Apple vol, the average. Now that would take in some outliers, obviously earnings, where volatility gets pumped for event risk, and certainly back in January, February, the markets were elevated. At any rate, the median 52-week, 30-day volatility, so half above, half below, which is a good thing, in Apple, is 20.8. It's currently trading at 23. Okay, so now I want to juxtapose that with the QQQ, because Apple makes up roughly, I'm going to say ballpark, it's 17% of the Qs. Its weighting is 17% of the Qs. I could be off by a click or two. But all's fair, and it's horseshoes and hand grenades. QQQ, by the same token, has it's 30-day. It's currently trading at 14.7 with a median of 14.2. So half a click over its normal thing. Apple 2.5 clicks over. Now, where it even extends, where that dislocation is even more apparent or even more distorted, is in upside calls. Now, I mentioned at the onset that Apple traditionally has a flattish skew, or gently sloping skew from top left to lower right. So what you're seeing here now in Apple is, with this move so violent, it's a spike, right? There's no doubt about that. It's vertical, it's parabolic, it's like it's climbing a wall here. in a very short amount of time. It's outperformed everything. So what's happened now is what you've got now. It's moved so rapidly that people are scrambling to buy anything, to cover shorts, to speculate. People are reluctant to go buy the stock up in here. So what they're doing is they're running and buying further out of the money calls, 235s. So there was a big call buyer in Apple at 230 line last week. Somebody bought about 50,000. That kind of was contagious and spread out to a lot of other things. So guys selling those 230 calls were reluctant to buy the stock at these elevated levels, I guess for good reason, and decided to keep options with options and bought 235s and 240s. What that did was it pushed the vol curve into more of a smile. So what you're seeing now for the first time that I've seen in X events and stuff like that, X earnings and stuff like that, the upside calls are trading at a premium to the at the money calls, which I've never seen. So what I said, and then I looked at, meanwhile, QQQ maintains a traditional normal index skew, slope from top left to lower right. Out of the money calls just get lower volatility the further out, the further right you go. So that gave me an opportunity. I wanted to look at how, and the Apple skew between a 25 delta put and a 25 delta call would traditionally trade at about 1.8%. The put roughly 1.8 vol clicks over. Say, we'll keep it simple, 11.8 against 10. Yesterday it was trading at 0. So what I said was, I want to avail myself of what I think is speculation, panic. I don't know what it is, but it's an opportunity for me. I want to sell a 25 delta call in Apple, which has outperformed the Qs so dramatically this year. Now, obviously, past performance is no guarantee of future thing. I mean, the Apple's up roughly close to 50% on the year, if I'm not mistaken, and the Qs are up roughly about 30, I think. Just trying to think. I have it in front of me. So bear with me for 1 second. So anyway, it's dramatically outperformed the Qs. Now, since August 1st, it's even more pronounced. Since the earnings came out on July 31, Apple's up about 20%, like we said before. Right. Qs are up 6%. So it's distorted in the short term. Now, I'm expecting, and as I sent you some charts that you can put up. Chart number 1. What I've done is I looked at the correlation between Apple and the Qs.
Tom, I was just looking at them. They don't come up that well. So if you could just describe.
Okay, that's fine.
Too small.
That's fine. The correlation between Apple and the Qs, I went back 7 years, 5 years, 3 years, and 1 year. It's always been around 73, 72, 73. In other words, every dollar move in the Qs is 72 cents in Apple, vice versa. Since January 1, it's been about 61. Since August 1, I'm using a 20-day rolling average here. Like 20 days is my number, whatever it is. I use a 20-day rolling average, and the correlation is about a 22, as low as it has been in the last 3 years. So they've kind of decoupled. Now, I'm a big guy who believes in mean reversion, so I want to say that this thing will come back to normal correlative values at some point in the near future, hopefully in the next 10 days or 20 days. So the bet I wanted to make was, I want to buy a 25. I did make it. I'm buying a 25 delta call in the Qs. I'm going to go out a month. So I bought the September 28 expiration. This was yesterday. 190 calls. I think I paid 90. We'll say 90 cents for argument's sake. It might have been a little bit more. And then I sold a hybrid of Apple calls. I found a 25 delta call in Apple, which was like the 238.8. So I had to mix the 237 halves and the 240s to create a synthetic call. So I sold a mixture of those, a blend of those two, to create a synthetic 25 delta call. So the vol disparity was so enormous that I could sell 5 Apple calls and buy 9 QQQ calls. Now, why do I buy that ratio? I buy that because of the dollar amount of the two stocks and the average in the 52 week, historical implied volatility of the two. So I want to balance the dollar. Right. I want to dollar weight it. And I want to Vega weight it. So I'm comparing apples to apples.
Right.
So I don't, so I'm doing the same thing. So I could buy 9 QQQ calls and sell 5 of those synthetic 238.8 calls in Apple. Every 9 by 5 I do it. Every time I buy 9, sell 5, I take in $2.40. Now the beauty of this thing, now the things against me today, because the Qs have gotten slaughtered in Apple's, where's it now?
Apple's basically flat as down
down
10 cents.
now.
Thing is
Right.
unbelievable.
So it doesn't go down. Well, I just did some more of this thing at what I think are better prices, but that's why you never do it all at once. I never get bottom. The only time I get a bottom is when I'm using a red ticket. So that notwithstanding, the beauty of the spread is this. I know you can work this up. Why I do it? I did it 9x5. I think the thing's going to. It's a correlated. It's a reverse dispersion trade. Like a lot of these banks use dispersion trading, meaning they'll buy the underlying stocks in an index and sell the options in an ETF, in the Qs, in the NDX, in the spiders, and figure that that's the way that they'll profit on dispersion. This thing I think is so. I'm doing a reverse dispersion trade where I am buying the index volatility, which is at or near historical norms, in an index that is. I think they're both overbought, but I would have told you that a month ago, so I'm wrong there. But I'm buying it in an index that has been dramatically outperformed by one of its constituents, by Apple, on a 3-to-1 basis over the last month. And I'm getting the additional benefit of getting additional skew on upside calls in Apple trading at a premium to at-the-money calls, which never happens. So I took in 11 clicks in volatility. I think I bought 12 and sold almost 24, 23 and a half, something like that in Apple. So the trade is this. Now let's think about it logically. I can buy 9 if Apple rallies 5%. And this is what you want to do. You want to break out. What you want to do is you look at a trade is, hey, where do I lose? I don't care where I win. I kind of know where I win, but where do I lose? Where do I feel pain? How much? I always use that other 4-letter word, room. I want to give myself room to be wrong, because I am invariably wrong. So if Apple rises, I'll go out a month. I'll go out a week in front of expiration. So I'm using the 928 calls. Okay, I use those. I want to say, hey, what happens if Apple rises 5% in the next what's that? 9:15 will be about what, 5-10 days? It'd be a dramatic move, but hey, anything can happen. It's been fantastic lately. Okay, so if Apple moves up 5%, that would put the stock at 240. Okay. The stock at 240, I would lose that. Now, what do I need? What do I need in the Qs to defray my Apple loss? That's the way I'm pairing this thing up. Now, in the Qs, if I get 4% in the Qs, I'm a winner on the trade.
Right.
If I get 3.5% on the Qs, I'm a winner on the trade. Now, obviously, that gets better as we go towards expiration. Because what's going to happen is if Apple goes up, say 7%, 7% is 230. Say it rallies $16. Right, it's about $14, $16. Puts the stock at 242. Okay, it's 244. Okay, so it's 244. I'm short the 238 halves. So those calls at expiration are worth $5.50. Right, 244 minus 238 half gives you 550. You got that? Right? You see that? If the Qs rally 5%, all right, that's 7 against 5. That's 0.71, roughly the historical correlative relationship between the two. If the Qs rally 5%, that will put the Qs, where are they right now? 184. That put the Qs up $9, say 193. Okay, I'm along the 190s. Those are worth $3. All right, you see that 193 is the stock price. The calls, I'm along the 190s. Intrinsically, they're worth $3. Okay. I have 9 of those. I've got 9 times 3 is $27. Correct?
Yep.
I'm short 5 of the Apple calls on a 7% move that are worth $5.50. So 5 times $5.50 is 27 and a half. Okay, I'm down 50 cents, but I sold the thing for $2.40. So I'm still up $1.90 per structure on a 7% move in the Qs and a 5%. I'm sorry, on a 7% move in that.
In what scenario do you get hurt?
Kind of what you had. Well, I mean, today is okay. If Apple were to rise 7% and the Qs don't get out above 190, I'm going to get hurt because those are going to be worth $5.50, and my Q calls are worthless.
Right.
Okay, so I need essentially the Qs from here. I need the Qs to rally half as much as Apple.
By the way, just
which
in remarkable fashion here, we are Apple's trading up 50 cents now. It's and Nasdaq futures are down at 83, which is about 1.1%. So it's tough market, tough being short Apple, that's for sure.
Well, a guy told me a long time ago, the tough trade is usually the right trade.
Yeah, well, we had Tony Greer on a few weeks ago when it was at 205, and he's like, yeah, it'll be a quick skip up to 225 or so, and amazing.
Guy was 100% right on the money.
I know.
Right, absolutely right. You just nailed it, no question. Great call. Right, I've been speculating on the short side with some various put spreads that I got lucky with because the volatility popped up. But I think this trade here it's great risk reward. All you need is 50% participate. If nothing happens, you pocket the $2.40 per 9x5 structure.
Yeah. Have you been looking
if God forbid the Qs rally 3%, if the Qs rally 3% and Apple doesn't do anything,
right?
Man, then you got another $1, so you're making $3. It's a great risk reward trade. You got room up to about like I said, you got room up to about 240. You need 240. You need 240. 241. You need 241 in Apple and the Qs to be here or lower in order to lose. That's where you would start to lose.
Right.
So 241 in Apple would be about $2.50 against that short synthetic call, and that's what we sold it for. That's where I turned down. But history tells us anything. I went back over 6 years, and this is the most the spread has appreciated one. This is the most the spread has appreciated in Apple's direction in a 20-day period over the last 5 years. So I got some history going for me. I got some vol metrics going for me, and I think what I think I'm doing is I'm selling a stretched asset for one that looks like they're both stretched, no question. One less stretched. I like that thing. I'll give you another trade right now. Tesla.
That's on top of everybody's radar. What do you like there?
Okay, I think it could trade down at 240.
There.
You got a chart there?
I'm bringing it up. Yeah,
okay.
It's up.
Okay. 287 was a big number. We traded down there twice. Held. I got there's an old saying, doubles work, triples don't. This is a triple. Now I noticed that today 287 seems to be the high in this thing.
Right.
I kind of closed there yesterday. Now it's the high. I think this thing has a chance to trade down at 244. Is that what I'm looking at on the chart? Do you see that chart there? That's from, is that May 2nd? I'm just trying to think. 1 second. It traded down at 244 on, I'm sorry, March 29.
Right.
Is that right?
Yeah, about that.
I'm sorry. Is that what it is? It's 248. My bad. I think you can trade there. Now, look, if you're going to do this, you gotta stay on top of it. I would just tell anybody who's doing it, if you like it. I mean, it's a good trade. You got good risk reward character. You got to stay on top of it. I would do something. This is what I'm looking to do. I haven't done it. I may do it at the end of the day. I want to leverage that 248 line. I think it could head there. There's 2 ways I could do this. Now, I could buy I would do something like this. I could buy the 250, the 255, 245 put spread. It expires on Friday. Now, one up, it cost me roughly, about 20, 25 cents ballpark. Is that about right? Yeah, okay. About 22 cents, I think it's okay. What I want to do is I want to buy 1 and sell 2. Okay, I'm going to buy 1 of the 67s, sell 1 of the 45s, do it for even. And then I'm going to go down, and just to protect myself, you know what? Yes, I'll protect myself and anybody out there should do the same thing. Put a cap on it. Buy like the 220 puts. Sort of a hybrid busted wing butterfly. You're going to pay 8 cents for that. You got all the downside between 255 and 245. 245 down to 235. You're going to turn down below 235, but you're going to cap your loss down with the 220 puts or the 225 puts. It's a little, I don't know if it's nuanced, whatever you want to call it, but I don't want to. I think it's a cheap way to take a look at the downside. I think you could trade down there. Or if you're afraid of that risk below 235, and yeah, certainly I'm cognizant of it. Just do the spread one up. You could pay. I'm sorry, what is it? 255, 245, about 32, 33 cents. Cheap. I mean, you get if you're right, you're getting what about 28 to 1, 28x on that thing. So I mean, that's a cheap freaking look on a stock that I think all bets are off here once it crosses 287. I know you don't need like I got to stress, you don't need 245. Thing goes to 265 tomorrow. The thing's that spreads like $2.30 or something like that. So it's already it's 6x, 7x. So that's a cheap risk reward play. I mean, I prefer what, if you're not going to watch it and be on top of it, just do it one up. If you're gonna watch it and you're willing to take a little more risk, I mean, you can maybe buy the 20s underneath it. Do it 1 by 2 and buy the 20s underneath it to fly it off. Sort of that's not a true butterfly, but that's one way to look at it.
What about have you been looking at any of the cannabis stocks?
I haven't. I see people talking about it, but I think I haven't.
I only bring it up because there's been tremendous volatility there.
Which ones? I mean, I haven't even looked at the option. What was one? TLRY? Is that one?
I'm not sure. I had, we're in the equity chat. They were talking about a number of different ones. CGC, CRON. There's a number of them, and they've had, obviously the CRON was talked about a lot because a lot of people were talking about it on TV, and I think there were a lot of comments that drove the stock down. Some short sellers coming in, and we've just popped right back up for the most part. And so it's been, we're talking also 30% moves, 40% moves on stocks that are moving 15, 20% a day, buyout, and obviously it's a big topic in the markets right now. And so just wasn't sure if you were looking at any sort of, if volatility was so high that it's not as attractive in the option space, or at the same time, I guess if you're long, it's probably a good opportunity to sell some calls against it.
Oh, well, you definitely, if you're long, yes, definitely. I mean, you're getting paid. I mean, you think 1 month paper is 100 volatility, man. What is the? I got CGC up. Wow, today was an all-time high, 56.60. I mean, here's what I would do. If anybody's long it out there and you like the story, I don't. I guess I like the cannabis story more when I was a teenager. Sorry, Joe. I would certainly 10%. What's 10%? 20% of this thing is $10.60. I would buy like the things had such a spectacular run.
Yes, without a doubt.
Why wouldn't you do? If you were long it, why wouldn't you buy? Go out. I mean, I'm just buy a collar. Do something. You like the story. You think it's going to 100. That's great. I don't know, but you could buy this October. 20% is what, 10.60. Yeah. So you buy the 42.5 puts in October, cost you $2.70, we'll call it, and 20% up, it'd be like the 65 line. And you can sell the OX 65 calls for 3.25, roughly. You'd be taking a credit. That's a great spread. It's a great spread. If you're long the stock, you believe in it, I'd buy the 42.5 put, sell the upside 65 call, you're taking a credit. I mean, you got room. You're going to participate on the upside all the way up to 65.50. If you believe in it, and it enables you to walk away at essentially 43.25 because you had the 75 cents you're going to take in on the collar spread to the to the strike. I mean, so you essentially walk away. Hey, if this stock could trade 20 in the next week, right? Who the hell knows? But I think it's something like that. You should avail yourself of. But look, I probably would have told you that with the stock at $30, so I would have been wrong. But once again. The time to buy insurance is not when a car is heading for the trade. But if you like it, you can buy these collars and they're there and you can do it. It's a zero cost collar. Actually, it's a credit. I think that's a good deal. I think it's a real good deal. Because what you're not getting now is, you're seeing that to a certain extent in Apple. When I say when the skew is in the dirt like that, when that 25 delta put is trading flat to the 25 delta call, or rampant. Hey, look, the 25 delta put is high because the calls are high, and it's just a function of put call parity. But there's an opportunity there that you can buy the put, sell the call, and put it on for nothing, and protect yourself down 10%. I mean, it just makes, to me, it makes sense to do it, right? And it's tough speaking that way, speaking in that vein, in a protective vein, during these heady times right now when everything just seems to be every dip is shallow and immediately bought, and cheerleaders from television and everywhere else. But I mean, I think prudence it's always the right thing to do. The hard trade is the right thing to do. If you're long these things, if you're lucky enough to be long this thing. And I know a guy I know fairly well bought this thing around Christmas time. And where would he have bought it? I mean, what was it, 50? I mean, he bought it at...
It's like last year's crypto. Crypto for 4 months just went sky high. This is the listed version. What about looking at the markets, scanning the other sectors that you look at? What sticks out, on an interesting day where we got NASDAQ underperforming, S&P under a little bit of pressure, but really not a whole lot. It's really more NASDAQ driven. Any sectors that stand out? I see financials are underperforming. Actually, no, I'm sorry. Financials are up on the day. So it's kind of, what do you got?
I'm looking at, it's interesting you bring that because I did some more of that spread. I'll put the prices up in a second when I go up on the chat. I did some more of that spread. Now I'm buying the SEP 89s in the Qs and selling the same line in the Apple thing. But I'm looking. I think Facebook. I'm keeping an eye on that. I think there's I'm looking at that 161 level. I was looking at the last time it was down here. I was looking at the 161 level. Obviously, I missed about, and I tried to sell it at 181. I missed it by like Maxwell Smart said. I missed it by that much. So I'm looking at this 161 level, which is 160. Yeah, it is 161. That's back from March 27th, the same day as Tesla. I think that's interesting from Facebook. I might look maybe if I get a chance, if volatility pops enough, and it's probably moving that way, I'll get a chance to do a 1x2 call spread, taking some upside calls. They look for a bounce in that. I'm looking at that. I'm looking to buy more Qs against the Apple. I think if you want to finance bets and the rest of these things, I mean, I think you can lean on some Apple upside calls. It's a soft short, and I didn't really address that enough. I mean, Larry knows the term, and I guess most veteran traders. I mean, a hard short is being actually short the stock. A soft short is where I'm short some upside calls, and it's going to take some movement for the stock to get there in order for me to get hurt.
Right.
That's what we consider a soft short. And then obviously the converse of the fact I'm not going to make as much money if I am right about the direction of the stock. But the beauty of that trade, as I go back to it, is that you can model it up. I don't know if you got a swim platform, whatever the heck you use, IB. You can model a trade. You win on so many different planes, and that's why I like it. Nothing happens. You win. They both go down. You win. You got room. You need Apple to essentially rally. What did I say? It was 7%, and the Qs do nothing and go lower in order for you to turn it down. I think it's a real good trade. You got good risk reward characteristics. Look. In a stock that's already rallied 20% in a month. So is it going to rally another 7%? I don't know. It can do whatever it wants. But I think if it does, I think it's going to take the QQQs, especially with the Qs, 12%, 15 to 17% of it. And you're buying QQQ volatility at it. You're selling that spread at a premium. Apple QQQ vol, what did I say it was? About 7. It's about 8 right now, typically around 5.5, 6. You're getting a premium there. You're getting correlation is blowing out of whack. It's trading at 22 correlation, lowest in 3 years. Historically is 71. Stocks outperformed dramatically in the last month, 60 against 6% respectively. Apple over Qs. You got a lot of things going for you. I think it's a really good trade. That said, I'm down on it right now. So that's why you do things in threes or in thirds or quarters. But I think that's a good thing. I'm looking at Facebook to get maybe to buy that if it trades down at 161 level. OIH. I'm looking to get long this thing here. Anything below 23.5. I want to get by. I'm essentially a contrarian. I mean, I just like to buy the stuff that nobody else wants, as you can tell, and sell the stuff that people like. I mean, I'm looking. Another thing was funny is I see this Turkish thing is getting back. It got back around a 20 level. I remember it didn't trade down like below. Was it 19 or 18? I think. It's got to be.
Are you looking at?
Turkey, was it the TUR? Is that what it's called?
I'm looking at dollar Turkey, and it is the Turkish lira is stronger today, and it's well off. So dollar Turkey got up above 7, about 722, and here we are. That was about 2 or 3 weeks ago. Now we're at 657. So it's actually a little bit of a Turkish strength today. and emerging markets across the board, which is also interesting. And what at before felt like a risk-off day, but here we are. We have S&P rallying back, Nasdaq's down about 1%. But really, the key theme is more, if anything, today Nasdaq underperformance, I guess, with everybody, the social media CEOs on Capitol Hill.
Yeah, well, I mean, I don't know. I like to typically fade news. I think it's kind of all built in. Everyone's waiting for it. It's much like I think like not Twilio, Tesla was before earnings, where everyone was looking for the big bloodbath, and it's lower now, but it went 100 points higher first. So I think I'd look to buy Facebook if I get the chance. Look, I missed it. I missed it down, I think, right here 3 or 4 weeks ago. Then I missed it by about 50 cents. I was at 181 and something. Now it's back here. So I like that. I mean, I missed gold a few times, but like Kimberly Clark, I looked to sell if it got about 117. That's a stock I've been looking at. Lulu, I had the right idea. I gave an earnings trade in there last week. My metrics were right. It's a 20% mover, and they got 20% in one day.
Yeah, that's been a big mover. That's been a big mover for the past year or two.
Right. That's an enormous mover. But I like that. I think Tesla's skew right now is to me something to keep an eye on. Downside puts are really being bid up, and hey, rightfully so, I guess. I think but that doesn't mean we can't go higher first. But I think I want to take a shot. I can do a spread like that in 3 days. I can do a one up, like what I would tell people to do a one up. I think you could trade down to 248. I like that 255, 245 spread. I'm going to do it a little bit more, a couple more bells and whistles on it. But I think 33 cents for that spread. Take a shot, see what happens. I think if I'm right, it's going to be 245 in a hurry. At least 265 in a hurry. And the risk reward on the thing is really good. So if you just do a one up, that's a good spread. Because you're taking in the skew between the further down you go in these puts, further out of the money you go, just keeps pumping up. Because there's just black swan stuff bid up all across the Tesla front tenor, which is obviously expires Friday. So I would keep an eye on that. I think it's a cheap spread. That said, I'm just I look to buy. I still think even though with this move we had today, I still think volatility is the cheapest asset on the board, and I look to buy more trees and spiders if I get the opportunity. I got some put trees in there that actually facilitated some stock scalps the last 2 days, so I'll keep it on. I bought the Nove 275, 280, 285. Buy one, sell one. I bought that. I like that. That's why I think you get a chance to buy volatile. Look, you may be this afternoon as the all clear is given for whatever reason. I look to buy things. Utilizing. Just give yourself room. That's the biggest thing I can harp upon.
The all clear.
Give yourself room.
The all clear is always given in this environment.
Yeah. Exactly.
Just give it a few hours. It'll be given.
You know that. But I think that keep an eye on that QQQ Apple trade. I think that's a real good trade. Yeah. Even though it's dipping right now, but we'll see what happens.
Definitely. All right. Hey, once again, a lot of great information on risk-reward opportunities in the equity market and options, being able to play it in the options. So thanks a lot, Tom McEntee.
Thank you for having me, Michael. Great being with you.
All right. Talk to you later.